So I'm very excited to introduce our guest today. We have Vardan Pogosian from Pogosian Company. He is a phenomenal CPA, but better yet, he is known as the former IRS agent. That's why he's in the shadows right now. His face is not fully lit on camera. He can't let the IRS know that, you know, he's talking to us. He's a former IRS agent, so I wanted Vardan on because I think he has a lot of experience working for the IRS in the past that's going to give us some insight into how things might play out and how things work behind closed doors. So thank you for coming by, Vardan, virtually. And Vardan's company is actually located in Glendale, so he has offices in Glendale. And the type of services he provides is basically everything and anything complex that you might need for your business accounting purposes. So specializing in certain areas of business accounting, including real estate, law, and I believe some other professionals areas,
Healthcare.
Right? Healthcare? Okay, awesome. So let's get started. We have some questions that we have received from people. We have questions that I've written down that I'm curious about. And we've been following this PPP and EIDL loans. So just for everyone to know, we're going to be trying to focus our time on PPP because that's the most questions we got were on PPP. Vardan, you are still frozen on Instagram, it looks like.
Yeah, I look like a typical accountant.
Yeah. So request to join again and I'll add you on. So we're going to focus on PPP loan forgiveness. And since we don't want to have like a 3-hour call here, so that we could get the most out of it. Let's start with the very basics. We all know that the PPP is the Paycheck Protection Program loan that a lot of businesses might have gotten. So now we're nearing that time at which businesses are going to be applying for forgiveness. So there's a lot of questions about that. So let's go right into the general criteria for PPP loan forgiveness. What do people need to know about how to get their loans forgiven?
First of all, thank you for having me, Armine. Just for disclosure, Armine is my attorney. She did the trust for my family, and I don't know why she invited me, because I'm a boring accountant and it's a boring topic, but I'll try to make it as juicy as possible. And we'll answer your questions, and I'm glad to be here. I always like to start with a joke. Yeah, I know accountant and joke are not synonymous, but
what's your joke, Vardan?
What's the difference between accountant and attorney?
Oh, what is it?
Accountant knows he's boring. Okay. So,
and attorneys think they're exciting.
Yes.
Yeah. So, second part to that joke.
Yeah. So much for bad jokes by accountants. Okay, let's answer questions. Yeah. So basically, the PPP is most of business owners, have applied or heard about this program. Basically, it's government's way of helping struggling business owners due to COVID-19. Basically, Congress approved a package where business owners get a loan to fund their payroll, mostly payroll. You can also use the funds for rent and some other stuff we'll get into in a moment. So in a nutshell, that's what the program is, to help struggling businesses affected by COVID-19 to keep them going so they don't go out of business and the economy. So basically, once you get the loan, and most of businesses have applied and received it so far. Actually, there are funds left right now that haven't been used, so we encourage people to apply if they haven't applied already, as opposed to EIDL where it's already closed. You cannot apply for EIDL anymore. But PPP, there are still funds. If you're a business owner listening right now and you haven't applied, go ahead and apply. It's the funds are there in a tune of like 130 billion, I think. There is still sitting that could be lent to struggling owners, business owners. So basically, the idea is you get the loan, and within 8 weeks, if you use up the funds, you are, eligible to apply for forgiveness. Yesterday, House passed a resolution HR 7010, and basically this resolution might extend, and again, it's a bill, it's not a law yet. It's going to have to go through Senate, then the president has to sign. But all the indications are, it'll be, law in some form. May not be necessarily in the form of, what the House drafted it, but it's expected to pass in some way. So House version basically extends the 8-week to 24 weeks. There's some talk in the Senate, they like to extend it to 16 weeks only, but the House version right now extends it to 24 weeks. But as it stands right now, it's 8 weeks. So by law right now, it's 8 weeks, but again, it could be extended. And actually, it's a good thing that, Congress is addressing this, because a lot of businesses got the loans. We have clients, in our firm who have received the loan, and they're not even open for business. Like, for example, some dentists were not allowed to see patients. I don't know if they still are, and they were like, okay, we got the money. How are we supposed to use this money? I mean, we're not going to use it in 8 weeks. So this will help a lot, for the struggling businesses to, have more time to, hire people, spend on payroll, and what have you. Basically, the 8-week or 24 weeks clock starts from the date your loan dispersed. That's the, regular way of counting the 8-week period. There's also an alternative covered period where you can choose to go the first day of your first payroll period following your disbursement. And that's a 56-day window. So you have an option on your application to choose which cover period you wanna go with. And 75% of the funds have to be used for payroll under the current law. The proposed bill lowers it to 60%, which is also another relief, for business owners. They won't be under the gun to, scramble and try to, hire people to, meet that 75% threshold. So, if this passes, 60% will help a lot of business owners. Also, salaries are limited to 100,000. Owners cannot bump up their salaries to, qualify for forgiveness. So 100,000 is the limit. And that's not only for owners, if you have high paid employees, 100,000 is the limit. If you pay someone 120, only the first 100,000 counts.
So going along those lines, Vardan, what about those people that are not corporations? They're not incorporated. They're actually sole proprietors, and they have qualified and received the PPP program. How are they supposed to use it on paying paycheck when they don't have a payroll? They don't run a payroll. They're sole proprietors.
Well, sole proprietors are allowed to count 1099 contractor pay, and also their own earnings up to 100,000 a year again.
So they can still, they base it on maybe last year's earnings?
No, forgiveness goes based on current year. You qualify based on last year. And also some sole proprietors have payroll. I mean, it's not as common, but some sole proprietors do have payroll, so the same rules apply for sole proprietors. Again, 75%, 25% rule applies again to them, just like anybody else.
Got it.
So the 25% rule is going to go to 40% rule if this law passes, and with non-payroll costs, let's quickly go over them so people know. It's basically rent, mortgage interest. When we say mortgage, it doesn't have to be real estate only, but it has to be business. So like your personal home doesn't count, your rental doesn't count. Your business, like, let's say you own the building you're in, the interest portion of the real estate counts as the non-payroll cost allowable to be forgiven. Also, equipment leases, things like, you purchased an equipment, and those also count the interest portion, and equipment leases too, because lease counts as interest in this case. Not the purchase, only the interest portion. Utilities, retirement contributions, group health insurance. Group is emphasized because, if you just, have health insurance for the owner, that does not count. Like, you cannot include it in forgiveness. It has to be group health for employees and the owner. So those are non-payroll costs in a nutshell.
So, with respect to payroll costs, Vardan, are the taxes that the company is paying on the payroll amounts that are forgiven? So let's break it up into federal payroll taxes and then like state and local payroll taxes.
Sure, very good question. There's a lot of confusion about this. Initially, like, banks were confused, and there was a lot of chaos about this. Payroll costs are wages paid, including employee portion of FICA, Social Security, Medicare. Those are payroll costs. What is not is employer portion of the FICA cost. You know how employer matches, employee, Social Security, Medicare. Those are not included in payroll costs. However, state and local taxes are included as part of the payroll costs. So employer portion, which is not big in here in California, but it's still, it changes the amount a little bit. And so that's basically, in a nutshell, what.
So basically, you can't use the government's loan money to pay the government back on payroll taxes. You can't. That would be double dipping.
Yes, correct. Very good point.
Okay. Yes. So as far as business owners who have received it, but they haven't made the disbursements yet, or they've run their regular payrolls, but they're trying to maximize forgiveness, what's like the one nugget that you would recommend, like the one piece of great advice that you have for them?
Yeah, I think the pitfall I see, the kind of a trap, here, potential trap, is FTE.
What is that?
Full-time equivalent. FTE means full-time equivalent. Full-time equivalent for employee headcount, basically. So when you go back to the bank and you're trying to, apply for forgiveness, here are the steps. First, it's either 75 or 60% has to be payroll, right? 25 or 40% under proposed law can be non-payroll. And people tend to concentrate on that, and they think, okay, like, once I meet these thresholds, my loan will be forgiven. But a lot of, business owners we talk to, because we advise them on this and, guide them through the process, they don't realize there is an FTE requirement, and it's as important as your 75 or 60% threshold. Because if you don't meet the FTE requirement, your loan will not be fully forgiven. So FTE requirement is this: during the covered period, when you apply for a loan and your 8-week or 24-week period, you have to count your full-time equivalents. Mm-hmm. Meaning, how many employees do you have full-time? If you don't have full-time, how many are part-time? So 2 part-times count as 1 full-time, right? So they use a 40-week period, and you can choose a simplified method where you can treat all your part-time employees as 0.5 equivalent, and all your full-time will be 1.0. You can also forego that and go actual FTEs. So it all depends on the situation. So, your accountant has to do that analysis basically to see, is it better to go, to elect, that option or not. So basically during that 8-week period, you count your FTEs. So for example, you have, 10 full-time equivalents during the 8-week period. Then what SBA is requiring is here, you have to compare your covered period FTE to one of the 2 cycles. First is you can choose between January 1, 2020 through February 29, 2020. So that's one cycle. The second cycle is February 15, 2019 through June 30, 2019. Don't ask me why. I don't know the logic behind it, but that's what Congress chose. So basically, between those two periods, you have to choose what to compare to your current 8-week period. So obviously, you're going to choose the lower one, right? Because you want to compare your current FTEs to the lower of the two, to qualify easier. So once you compare, let's say January 1, 2020 through February 29, 2020, you had 9 equivalents, full-time equivalents.
Wait, Vardan, I know that people are going to be confused because I'm confused. What's the definition of a full-time equivalent?
Full-time equivalent is an employee or employees that make up one full-time equivalent
time
kind of a head count. Yeah. So
okay,
for example,
so like 40 hours is full-time in a week, and you have 2 part-time employees that have 20 hours, 20 hours.
Yeah.
You put them together.
Now you have total of 3 employees, right? But your full-time equivalent is 2. So you have 1 full-time and 2 part-time. So your full-time equivalent is 2, even though you have 3 employees. A full-time equivalent is not necessarily, the head count. It's equivalent of full-time. So you could have 20 employees and have 10 FTEs. So that's an important, distinction. So I think that's what the pitfall is. Your question is like, what are the, pitfalls here? And to me, one of the biggest pitfalls here possible is the FTE count. And basically, you compare your covered period FTEs to FTEs in one of those 2 cycles. And if your covered period FTE is higher or at least equal to lower of the 2, then you're good. And here, where some planning has to be done, because you don't want to wait until your 8-week or 24 weeks is over, and then you're against the wall and you realize, well, my FTEs are short, and now your loan is not forgiven, even though you met the 75% threshold. That's a key, where people think, oh, if I meet 75, 25%, then I'm good. But no, you have to also make sure you meet the FTE requirements.
I think you're right. I think that's going to be an area that not many people understand, and they get dinged on heavily. So let's say somebody had 5 employees, full-time employees, in whatever pay period or period that they chose, and now they've had to reduce their workflow, right? Reduce their workforce, and they only have 4. So how does the difference of losing 1 full-time employee play into the loan forgiveness? I'm asking you to do math, I think, which is not a great question.
Yeah. No, it's fine. I mean, it's pretty simple. If you currently a covered period is 4, and the best you could do is 5, one of those 2 cycles. So you divide 4 by 5 and you get 80%. So 80% of the loan will be forgiven and 20% will not be forgiven. So just like the same ratio you would use if you didn't meet the threshold amount, so that's why it's super important, to do the FTE count. We actually started a project, this week for all our clients who engaged us to help them with PPP. And, we're counting their FTEs, we're counting their thresholds. And we were about to reach to them like today or Monday, and then we heard about this new bill that passed, and we put the brakes and we're like, okay, let's step back, because application is going to change. The one that they issued last week, that's going to change, and we held off on that. But it's important to do that analysis now. It's like tax planning. You have to plan this thing, otherwise, if you wait until the end, the game is over. You can't retroactively change the past or hire people, or fudge with your payroll. So And one more important thing also to note about the FTE, Armine, I think it's very important for people to know, and it's very common. You have employees now on unemployment. They're receiving unemployment in tune of like some people get like 4,000 a month. You know, they're making more on unemployment than, you know, their wages in the past. So they have no incentive to go back. And Congress realized this, and people, you know, business owners complained and said, well, we're trying to call these people back, they're not coming back. You know, if the employer puts it in writing, the job offer, sends it to the employee and can document that, actually, you can count that employee as part of your FTE in the cover period. Very important to know. So you have to be able to show, though, that you made, you know, it has to be in writing. You can't just call up your employee and say, hey, come back. They say no. You have to have it in writing, like kind of a job offer, hey, come back to work kind of a arrangement. And then we're not really clear if you have to like notify the EDD that you made out, but Treasury said whoever is offered is not qualified to be on unemployment. So those people have to come out of unemployment if they were offered a job from their employer.
Yeah, I actually read you do have a notification requirement to the Employment Development Division that you have to, as the employer, you have to show that you notified EDD that you offered a job and they didn't come back, which I think might hurt a lot of those people that are, you know, gaming the system or using the system.
Yeah, I mean, it's a fair game. I mean, I think it's fair. You know, unemployment was meant for, you know, people who lost their job, not to, you know, like sit home and eat popcorn and, you know, collect unemployment.
So with that same logic, if you had X amount, let's say you had, again, 5 employees in the month of February, at the end of February, you had 5, but you let go of one with cause. Let's say they were an at-will employee and they just weren't performing. And so you fired them right before all of this happened. Right? And then now you have X amount, 4 amount, 1 less. But it wasn't a result of COVID. It was a result of actual just business development. They weren't a good, you know, whatever, team player, whatever it is that was the cause of letting them go. How does that play in?
I believe that you can exclude that person from your FTE count. So it's, I remember seeing something like that. So.
Yeah, I do too. I just wasn't sure, so I wanted to hear it straight from you. So we have some questions that a lot of people, well, this one question multiple people asked, which was, can I add a family member to my payroll to make up for the shortfall in the FTE?
Yeah, very common question.
Or a friend, I guess, it doesn't matter.
Yeah, we get this daily pretty much. The answer is yes and no. Yes, because there's nothing that says you cannot hire your family member. So we haven't seen anything like that, you know, in any guidance. Potentially no is you know, with my background and, you know, doing this for 17 years, you know, you have to be able to justify anytime you hire someone, because the question is not only PPP here, down the line, tax deductions and so forth. So you would have to be able to justify your hiring. In other words, you cannot hire your 12-year-old and claim that they were your paralegal or your tax accountant, right? So.
But Vardan, can I hire my 7-year-old to shred paper? That's the important question here.
Consult with your labor law attorney on child laws on that one. Yeah, I mean, from tax standpoint, possibly, but yeah, of course, the answer is no, probably. And so, yeah, you have to be able to justify.
So it has to be a legitimate reason. Like if you can use them, if you make an offer to your employee and your employee doesn't come back because they're on unemployment, and you need help at your business, then go for it. Hire family, hire friends, as long as they're going to do the job.
They're going to do the job. You can justify they did the job, and you know that, you know, as long as you include them properly on payroll, issue a year-end W-2, so they, you know, report that on their returns. You know, following all the regular steps. You know, complying with all the labor laws and so forth. And, if that person, is doing legitimate work for your company and happens to be your sister or your, brother-in-law, what have you, why not?
Okay, so going back to, I'm going to kind of go to the basics here. Is it only employees that are on payroll that are included, or can it be employees that you pay, let's say, cash to, or it's an independent contractor, let's say, if you
No,
report them?
It has to be payroll.
Gotcha.
Yeah, independent contractors do not count to qualify for PPP, and they don't count to forgive PPP. So that's important to know.
Got it. So just to summarize, the law right now allows a ratio of 75% to be spent on payroll and payroll related, 25% on business, leases, utilities, and whatnot. But that is changing, it looks like, and I think it's going to change. There's no way it can't. Like you said, you and I both have lots of clients who are in the entertainment industry, they're in the food industry, they're in the professional dental or other medical industry where they're just not open. So how the heck are they supposed to use this money on payroll? Which it makes sense to extend that period. So I think we're going to see that. And I really like the fact that they're going to make the ratios a little bit more lenient with 60-40. Because even though your business has suffered and the purpose of this money is to reignite the economy by allowing you to hire back, if you don't have enough work and you're simply not able to hire the same workforce, I don't think you should be penalized for using it for, paying your rent or your lease or your utilities. It's still a legitimate expense. So we'll keep a track of that. At this point, it's in Senate and we're waiting for Senate to vote on it, right?
Yes.
So let's move on. If the PPP, let's say, you had 100,000 in PPP loan and 90,000 of it was forgiven. How does that 90,000 get reflected on your year-end taxes? Is that something that you have to pay taxes on? Is it an expense technically? Can you still use those payrolls deductions as an expense of the business, or you can't double dip?
Yeah. So here's the thing. There's two parts of it. So so first, question is, if my loan is forgiven, is that going to be taxable income to me, like as a loan forgiveness amount? Because normally when your loan is forgiven, you're supposed to pay tax on forgiveness amount. IRS came out and said that PPP loan forgiveness is not income. So, business owners, businesses are not going to pay tax on the forgiveness amount. The other part of the question is, okay, that's great. I'm not going to pay tax on forgiveness amounts. Sounds really good. Can I still take a deduction for the wages paid using PPP funds? That's a different question. The answer to that is no. IRS came out and said that we will not allow a deduction for wages paid with PPP funds that are forgiven. The unforgiven part, you can still take a deduction, but forgiven part, you cannot. However, some senators took exception when IRS, came out with this directive. They said, well, our intent was not that. Our intent was for this to be a deduction. So what I'm hoping for, Armine, is with Senate, when they get the bill, they got it today, I think, hopefully will address this in their version. Because as it stands today, May 29th, IRS says no deduction for wages paid using PPP funds that are forgiven. So I'm hoping that will change, because the intent of Senate was for it to be a deduction. So.
And I'm guessing it's the same for utilities and lease and mortgage payments made that were also forgiven, that you can't deduct those as legitimate business expenses.
Yeah, anything that was used for by through PPP and was forgiven, they're saying there's no deduction, but we're hoping that'll change.
Interesting. So we have a question from Facebook. Can you clarify the qualification of health insurance if the owners are also included in the group health insurance for the business. How does that work? I hope I'm reading your question correctly, Melanie.
Yeah, as long as health insurance is through group plan, it is considered as non-payroll cost allowed to be forgiven. And they were allowed at the application time to qualify for the loan amount, and they're allowed to be included in the forgiveness. But again, the emphasis is on group health. It has to be a group plan. So an owner is allowed to be included in the group.
Got it. So I think if you have like a POP plan, Melanie, where you're paying your own health insurance, but it's coming out as a shareholder distribution, that's not going to be considered deductible. But if it's a legitimate group insurance policy and you're one of the participants, let us know if that answers your question. They aren't part of the group plan. So that I hope that's exactly what we're saying. If you're not a part of the group plan, you're not going to get that amount forgiven. It's only going to be group health insurance that's included in the PPP forgiveness.
The same goes for retirement contributions. It has to be like group 401k, or group pension plan or anything like that. So.
That, I mean, it makes sense. It makes sense. Otherwise, you can control how much you're giving and what you're doing, and mess with the system. So, do within this framework of payroll, are sick leave payments calculated? So if we have an employee that goes because they're contracted COVID and they're out for 2 weeks, we're mandated to pay the 2-week payroll. Is that payroll amount an amount that could be forgiven? Yes.
Vacation pay, sick pay is included as part of the payroll costs. Correct.
So even vacation pay is included?
Yes. Yes.
Now my brain is like, how is this going to come into play, and how are people going to take advantage of this?
Well, I don't think it's that big of an issue, because I mean, if the employee happens to use their 2 weeks allowed for the whole year during the 8-week period, I mean, so be it, I guess. Because every employer has limitations on vacation and sick, so it's not, I don't think it could be abused unless if the lender sees that an employee exceeded allowed vacation, right, limit, and employer allowed it, then that might be questioned, right? But if someone used their vacation or sick time, based on the company policy, the limits, that should be allowed.
And would it be the same for employer paid reimbursements to the employee? Let's say there are, some companies have a lot of employees that are working remotely, and they're paying for the internet costs as well as the phone usage, computer usage, whatever. So let's say they're paying a monthly stipend or a reimbursement to the employee of $100 for their own personal use of their own personal items to work remotely from home. Is that something that's also forgiven?
I think it depends if it's an accountable plan or non-accountable plan. If it's included in their wages as taxable, I would say yes, that should be counted as payroll, because on the other hand, someone is picking it up as income, right, on their W-2. So that's, I would say in that case, yes, it should be payroll cost.
And what about
But
bonuses?
if it's non-taxable reimbursements, then that's different. I don't think that's payroll cost. You cannot include that as payroll.
What about bonuses to employees?
Bonuses, yes. Bonuses, from what I've read, at least in the current law as of May 29, yes, bonuses are included.
So this is the time, if you have that great employee and you were holding out till the end of the year to give them their year-end bonus, you might want to do it earlier on, right?
Yeah, but here's the thing on that. If you're like, struggling to, make up the 60% or 75% threshold, you might consider that. But, if you're, meeting the threshold amount, there's no urgency to do that.
Yeah. So we have another question. are there any incentives for employers to use funds to make their workplaces safer for employees and operations, like extra sanitation, temperature check, masks, gloves? Are there any, I guess, tax incentives? So we're like bypassing our PPP for a minute.
Yeah, this is more of a tax. Yeah, I mean, IRS tax code, you know, section 162 says if you have any ordinary necessary expenses, you're allowed to take a tax deduction for it. I'm assuming that's the question. If, you know, you can take a tax deduction for it. So, you know, considering the current circumstances with COVID-19, I could easily argue with IRS that, you know, sanitizing my workplace is necessary and ordinary at this time of the year, or we're in pandemic. So yes, I would take a tax deduction. I would take that position for my client and take a tax deduction.
But it would be a deduction. There would be no like incentives that the IRS has that rewards employers with extra kudos credits.
Not that I'm aware of, no.
Okay. So hopefully,
Maybe,
John, that answered your
any.
question.
I mean, another reason to make your employees, I mean, another incentive would be to make your employees more comfortable for them to come back. You know, in our office, you know, we have implemented, you know, temperature checks, you know, a lot of alcohol around.
Regular alcohol.
No.
Rubbing alcohol.
Rubbing alcohol around, you know, and, you know, we're sanitizing, and we're closed for, you know, in-person appointments even today.
Yeah, great. So we have another question. I've read that some utilities can be prepaid during the 8-week period. Is that accurate?
No.
So what is that referencing?
I lost your voice, Armine. I can't hear you.
Can you hear me? Did I lose?
Yeah, now I can hear you.
You can hear me now?
Yeah, you were muted.
The question is, I was just asking, what is that in reference to?
Oh, and non-payroll costs.
Yeah.
Right. I think that's what the question is. If I prepay my utilities, can I include that in forgiveness? The answer is no.
So the IRS will know that you paid for the entire year's worth of internet instead of just your March.
Oh, are they talking about PPP or?
Yeah, I think the question is during that 8-week PPP period, if somebody front loads all of their utility payments, like let's say internet, super simple, instead of paying just your March or your April and your May utility payment, you pay for the rest of the year and the utility company holds that as a credit to apply to the future months.
Mm-hmm. You cannot take a tax deduction, and it will not be allowed in PPP, if that's the question.
Yeah. So within that 8-week frame that we currently have PPP, I just want to clarify, it's expenses incurred and paid during that period.
Exactly. Yeah. It has to be incurred and paid.
Yeah. It's not just expenses paid, but not incurred. So Melanie, I think your question, you're asking whether future expenses can be paid during that 8-week period. And it seems like the answer is no.
Mm-hmm. No, correct.
Yeah. Your answer is a no-go. You can't do that. Right. Mm-hmm. Would that, but I'm like, now I have like my lawyer wheels turning. I'm like, maybe it would work for your lease. Wouldn't that work to prepay? Let's say you enter into an agreement with your landlord, right? Because a lot of people aren't paying their rent. Mm-hmm. Enter into an agreement and you say, you know, why don't you discount the rest of my annual lease payments? And instead of me paying you $1,000 every single month for the rest of the year, I will pay you on a sliding scale. I will pay you $3,000 this month, $2,000 next month, and then $300 for the rest of the year. And you amend your lease agreement so that you are squeezing as much as you can within this PPP 8-week time frame. What do you think of that?
Is that a question for taxes or PPP?
Question for PPP.
PPP, I don't know how the lender is going to look at it. They're going to, I mean, I know they're going to ask for lease agreements prior. So my guess is they're going to look and see like what you paid, you know, prior to 8-week period and what you're paying now.
And if you have an amendment to your lease?
Yeah, that's probably a more of a lending legal question. I don't have an answer, honestly. I don't know how the bank will look at it, you know.
Yeah. So one of the questions we got was, is there rent included too in PPP? Yes. You
Yes.
use the PPP money for rent, mortgage expenses. So on this, I think this is the last question for PPP that I have. So if you guys have any more PPP related questions, ask now or forever hold your peace. With the PPP loan, is it personally guaranteed by the shareholder of the corporation or other entity?
No, there is no personal guarantee. And one thing we didn't cover are the terms of PPP early on. So basically you have 6 months of deferment in case your PPP is not forgiven. Let's say, you know, you end up, you know, owing the PPP. So there's 6 months deferment and the interest is accruing during the 6 month period. And it's 1% a year. And it's a 24 months loan. Under the House proposal that, you know, passed yesterday, they want to extend the term to 5 years from, you know, 2 year period. That also is going to help because, you know, some businesses, if they have larger PPP, it wasn't forgiven, then they have all these large payments because it's only 24 months. So now it might be extended to 5 years and no personal guarantees.
Got it. So just to clarify, the 1% accrual starts after you submit for forgiveness or when you receive the funds?
From day of disbursement of the loan.
So for a certain amount of time, the entire loan amount is calculated at 1% and then a smaller portion.
Yes, if it's, you know, if it's forgiven partially, yes. And then whatever is not, you know, whatever is forgiven is not going to keep accruing interest.
So we have a question related to sole proprietors and PPP on Facebook. So we covered this earlier and we'll save this video so you guys can watch it. But the question is to clarify the rules for sole proprietor. I think a lot of people are confused about the type of proof that they're going to have to show to get the forgiveness as a sole proprietor. So what's an example of something that someone can show if they don't pay themselves on a formal payroll?
Well, what they've earned during the 8-week or 24-week period, again, limited to $100,000 per year, plus whatever they pay to independent contractors during the 8-week period, plus the rents, utilities, just like, you know, what we've covered today. Everything else applies pretty much the same way. You know, just payroll portion is a little different for sole proprietors. That's all. Everything else is pretty much same as far as I know. And so
I think, yeah, you're definitely right on that. There's different ways of different proof. I really recommend you go to the SBA and download the loan forgiveness application. For those of you that are asking questions regarding sole proprietorships, there's an FAQ section, and I remember reading explanations of what type of documentation that they would accept for sole proprietors to get the amounts forgiven, and how they're going to look at the average amount that you were receiving before and what you've earned now. So definitely review those. So let's move on to EIDL loans. Let's just go to the basics here. You said that they're currently closed. They're not taking any more applications. So
right.
Let's not cover eligibility, because even if we do, no one can actually go out and get the loan. If someone has received the loan, what should they know about the basic terms?
So the terms are basically 12 months a deferment and 30-year loan at 3.75%. So a lot of people who receive the loan, you know, they say up to $2 million, but it's currently capped at 150,000. So, you know, nobody is receiving 2 million out. So, you know, as you know, it's confirmed that, you know, the max they're doing is 150. However, early on, people receive more. You know, we have a client who received 500,000 early on. But, you know, after a couple of weeks, they realized they're going to run out of money, and, you know, if they had to cap it. So they capped it at 150,000 max. So 30-year loan, which is really good. Basically, it's amortized over 30 years at 3.75%. So it's a really good deal.
And then you said it's capped at 150. How do they determine the amount that they're offering people?
I wish I had an answer. We know it's based on industry. We've called SBA a couple of times. You know, we spoke with people, you know, knowledgeable with SBA loans. Basically, they're saying is they have some criteria based on your industry. So, you know, and how exactly it's calculated, I don't know. But what we've been told is it's a function of your industry and your size, your employee size, your revenue size, and your industry. They take that into some kind of a formula and determine your loan amount. And there are industries who are excluded, and we heard some people were denied an EIDL loan. They said you're an industry where EIDL is not, you know, you don't qualify for EIDL.
What are those industries? Just curious.
The one we were, you know, told by a client is marketing. Marketing, consulting, yeah. And we just, you know, they received a letter and denial letter by SBA, and the denial letter said, you know, you can appeal this decision, you know, write to this, you know, address or fax here, and tell us why you think, you know, we made a mistake.
So, Vardan, going back to the loan amount, regardless, well, let's not, irrelevant right now for this question, but is the EIDL loan personally guaranteed?
Up to 200,000, no.
Okay,
so
magic number 200.
Yeah, and basically, whoever is getting, who has received it the last 3 weeks, there is no personal guarantee because everyone got it at 150 max. So whoever got it lately, there will be no personal guarantees. But early on, whoever received larger amounts, they will be personally liable.
And I want to clarify just one more time, the EIDL loan has no forgiveness program.
No. You will be liable, your company will be liable to return the funds, to repay the funds.
And what about the initial advance that was given to a lot of people?
Initial advance, very good question. You know, initial advance was supposed to be grants. So even if you did not qualify later on for the loan, that was like, you know, you didn't have to return it. We saw 2 treatments of that, you know, by SBA. We don't have the logic for it. On one hand, you had people who received the grants initially, then they received the EIDL, and they said, well, the advance we gave you, the grant we gave you converts basically to an advance. Now you owe us the whole amount. So for example, you know, we have a client who received $10,000 grant, you know, initially, you know, and then they received $140,000 subsequently. But their loan documents says $150,000. So basically that $10,000 converts into a loan. And we've heard some people received, you know, $5,000 advance and then subsequently the loan. And the loan is for, you know, $150,000. So it didn't convert into the loan. So we don't know the reason for it, but if you are liable for the money to repay, it converts into a loan, then it's no longer a grant.
So I guess it depends on the loan agreement that people sign.
Yeah, you have to be really careful when you get the EIDL loan docs to read to see, you know, if your, you know, initial advance converted into a loan or it stayed as a grant.
And I think you're going to agree with me on this, but I think something that people are not aware of is allocating it correctly on their books.
Mm-hmm.
That you can label it in the appropriate category so that you do get in case of an audit, right? But we'll get into that. So as far as the loan amounts, we have a question that we also have on our list is what restrictions are there for how to use the EIDL? What can businesses use this money for?
Yeah, they have to use it for working capital, like payroll, restocking your inventory, paying your payables, paying your vendor, and so forth. So the idea is you take the money and you use it for, working capital of your business. You're not allowed to take dividends. You're not allowed to take distributions, repay your shareholder loans, expand your facilities, and refinance your long-term debt. Those are not allowed. So you can't just like take the money out and, buy a real estate or, if you own your own corporation, you cannot, repay yourself for the loan that you owe to your own corporation.
What do you mean, your own corporation?
Let's say I owe Pogosian Company $100,000.
Personally, you bought?
Yeah, like I borrowed from my own corporation. And then, I got the EIDL, and I'm like, oh, great, I'm gonna repay me because my company owes me $100,000, right? I put in, and it's a legitimate loan, and there's repayment, and then I'm using the EIDL money to pay myself. That's not allowed.
That's not allowed.
No, it's not allowed. No. And you cannot take distributions from the EIDL, and you cannot expand your facilities, even business facilities. You cannot buy another building for your law firm or your CPA firm for your distribution, a center, what have you.
But can you better your equipment or technology that you're using? Like, let's say you have a machine, like you're a dentist and you want to buy a 3D printer.
Yeah, that's not facilities.
Okay.
That's the working capital. That's you can use the funds for that. Yes.
Okay, so John, I hope that answers your question. You can buy as many computers as you want and equipment. So we have a question: what happens if the loan request is denied? So I think Vardan mentioned you can appeal it.
Yeah, there are appeal instructions in the denial letter. I don't know how successful that's going to be. We haven't done it this but you can always try.
Yeah. So you use the money to pay for your ordinary business expenses. You make sure that you're allocating it correctly in your bookkeeping so that it's nice and clear. But how are they going to actually look back to see if these businesses actually suffered a loss? Is there going to be some sort of audit that happens?
I think, they're going to have some audits. I'm sure, there'll be some audits. The sheer volume of these loans, I don't know if the government has resources to audit every single EIDL loan. Probably not, if I have to guess. Again, it's a guess, but there'll be some audits. Yes, they'll audit. My guess is, they'll audit loans of $200,000 or more first, because you're personally liable for those loans. And if they find something, they can go after the owner, right? Because now, they can hold the owner liable. So just IRS agent in me says they're gonna go after 200,000 or more first. If they have resources, they'll go down to, your 150s and 100,000 loans second.
What kind of resources are we talking about? Like, what does it take to become, they obviously don't have the manpower right now, right? But there's also some educational and training requirements to become an auditor for the IRS. So is it even feasible that they're even gonna be able to hire?
They would have to have loan underwriters, I guess, or I'm not really sure in the lending industry how it works, but my guess is, they're gonna hire, people who have, intimate knowledge of SBA rules and SBA, requirements. They can't just hire people off the street and make them, SBA loan auditors. So these would have to be former SBA loan agents, underwriters, or anybody who is has a background necessary to be an auditor. You have to know your craft to be an auditor. You have to know what you're auditing.
So, and then as far as the like, let's say they audit and they look at your books, what are they looking for exactly? Are they looking for like a dip in income right before you got the loan? How are you going to prove that?
It's really vague, honestly. Like, when you read up on SBA, one of the main thing is, you have to show that you were in the disaster zone, which we are in California here at least, so I think, and then you suffered some, injury. I haven't seen anything, definitive as to like, oh, you have to show any X dollar amount of losses or anything like that. So I think the sheer fact, like, I don't know if you're in like some, I don't know, in South Dakota or somewhere where, there are 18 cases of COVID-19 and you got the EIDL, I don't know, maybe that might be questioned. But here in California, New York, or in most of the country, I would say 80% of the country, I think we're in, disaster area. So disaster is and economic, some sort of economic loss is the criteria. But I haven't seen anything that says, oh, you have to have suffered X amount of money to qualify for it.
So Vardan, based on your experience, like with your own clientele, have you been seeing clients that own real estate LLCs apply for and get the EIDL loan?
I'm sorry, LLCs?
Okay, let's say I own a rental property through a limited liability company, an LLC, and I applied for the EIDL loan because as a landlord, they're not paying my rent.
Mm-hmm.
And I'm suffering economic hardship because of COVID. Are you seeing, have you seen any of those types of businesses get?
Honestly, no, we haven't had any client apply for a EIDL who owns an LLC holding real estate. That's not to say that, they won't get it, but we didn't have any clients apply for it. We've helped, a good number of clients to apply, but none of them were in real estate. And we haven't been approached by any clients in real estate to apply.
Let's play this out. Would someone, let's say they do qualify for the loan and they were able to get the loan, they suffered a loss. Let's say they qualified for $100,000 to keep it simple. Would they be able to use that to improve the real estate, or is that considered a violation of the terms since they can't, quote unquote, better their business?
My guess is, real estate might be one of the industries, if I have to guess, again, it's my guess, that wouldn't qualify for EIDL. But, in that case, that's kind of a mute question, but if they were to qualify, that's their line of business, I don't know, maybe it's allowed expense because, that's what you do, you're in real estate. If you're given the money, then how else would you spend? You don't have payroll, you don't have much. So, but my guess is real estate might be one of the industries that is not qualified to get the EIDL.
Okay. So I think we covered all of the EIDL loans, unless you guys have any other questions on Facebook. Let's jump in and talk about the Families First Coronavirus Response Act and what that means for tax credits.
Yes. So basically, in a nutshell, FFCRA is a tax credit allowed for business owners who provide 2 weeks of paid sick leave to employees who are in quarantine or experiencing COVID-19 symptoms. I think they don't have, it says symptoms, I guess they don't have to actually be diagnosed with COVID-19 as long as they can somehow substantiate that they have, symptoms of COVID-19. So employer must provide 2 weeks of paid sick leave, and 2 weeks is defined by 80 hours. And also part of this provision is the person who also cares for individual with COVID-19, a family member, a child, or, if you care for someone else, you're also are entitled to 2 weeks of paid leave at 2/3 of your regular pay. So in a nutshell, that's what the
happens on the tax front. They get a credit for the monies they paid.
Yes, you provide to your employee as an employer. You provide to your employees, 2 weeks of paid sick leave if they're quarantined or COVID-19 symptoms, or if they care for someone else, 2/3 of their pay, and then you turn around, you get a tax credit for it, for providing that benefit to your employee. So it's not at your own cost; it's subsidized by government, basically.
So is that tax credit something that people will see immediately on their payrolls or on their processing?
No, the tax credit is on the employer side.
Right.
The employee, the employee is getting paid leave, basically, on top of their regular. Let's say, they used up their sick leave, and this is requirement. If you're an employer with 500 or fewer employees, you're required to provide this to your employees.
So let's say one of my staff members gets sick. I give them 2 weeks paid leave under, the FFCR, and then do I turn around and apply for a credit immediately, or do I wait till the year end when I'm filing my taxes? That's my question.
No, it's a payroll tax credit when you file your payroll, your quarterly payroll taxes.
Got it. So you can see that credit.
You have to wait until your quarterly, payroll is due.
Well, that's good. So that's good news today, guys. You can at least not have to wait if you are going to. And then I'm guessing that amount that you pay in sick leave is not forgiven if you had a PPP loan. You can't double dip. So
as far as
a 2 week sick leave, I can't.
Oh, I mean, if you're a PPP recipient and it happens to be, yes, if it happens to be in the period of 8 weeks, yes, yeah, that's a good point. Yes, there is no double dipping.
There's no double dipping. That's the theme of this webinar today. So what employees can actually claim this?
Actually, going back to, since we brought up PPP again, going back to PPP also, we missed the point about EIDL advances. If you received a grant, the EIDL grant, you have to include that in your application for PPP forgiveness, and your loan for PPP forgiveness is going to be reduced by the amount of EIDL advance that you received. My take on that is this: I was talking to my staff yesterday about this. If my grant converted to a loan, and hopefully it's addressed in the Senate version, why is my PPP reduced now? Because it's not a grant anymore. I mean, it's a loan now. I'm liable to pay this EIDL back. So just blanketly and just saying like, oh, you received the EIDL, advance, now reduce your PPP. I don't think it's fair.
So does it reduce the forgiveness amount, or?
Yes.
So it reduces, you have a new cap of forgiveness that you could go up to.
No, let's say you got 90,000 PPP. Let's say all 90,000 you were able to substantiate, you met all the rules, and you had a $10,000 EIDL grant. Now your loan forgiveness is 80,000. So that 10,000 needs to be repaid.
Yeah. So, I mean, to me it makes sense, right? Because again, you can't have forgiveness and a grant. This isn't intended for people to come up. This is intended to subsidize and help you get through the hard times. So, as far as qualified sick leave wages, can you just define what qualified sick leave wages are?
Basically, yeah, what we talked about earlier, if you have COVID-19 symptoms, if you're quarantined, quarantine means, I mean, at least, my interpretation of it is that, you might have been exposed and you have to be quarantined. Let's say you travel to China and, you're back, you have to be quarantined for 14 days or what have you. Mm-hmm. So, qualified sick leave is that, symptoms, COVID-19 diagnosis, symptoms, and, quarantined for, mandatory reasons. So.
Gotcha. Are there any COVID tax credits that are available for self-employed individuals?
Self-employed individuals? No, I'm not aware of any.
Okay. And then just really quickly, the tax deadlines right now, all tax filings have been moved up to July, is my understanding, right?
Yes, July 15 is the deadline to file and pay, not only to file, but pay. Your Q1 2020 payments also are deferred to July 15, and so is your June Q2 quarterly payment. And it's important to note that, past July 15, we have no revisions to that deadline yet. So it's an important deadline. We haven't heard anything that is gonna change. So it's important to, contact your accountant, next, 3-4 weeks to take care of your taxes if you haven't.
So I want to ask you some general questions I have about accounting. I want to know how your practice has changed because of this. Like, are you advising clients differently than you were before because of everything that's going on? You're probably seeing more people doing some really strategic tax planning now, mm-hmm. that otherwise not come to you until, let's say, September or August.
Yeah, I mean, this pandemic, this whole COVID-19 affected everyone. And, I think it changed people's perspectives. People are, approaching things differently now. They realize that, they need to plan. They need to plan whether it comes to their taxes, whether it comes to like operations of their business, the reserves they have to have, the critical tax planning things you have to do to minimize your taxes so you have more cash flow for situations like this. And, also to just be able to better prepare. Like for PPP, you plan to have PPP forgiven. That made people realize you have to plan to have your taxes lowered, just like you're planning now to, to forgive your PPP, for your PPP to be forgiven. Same thing, we tell people you have to plan in advance to lower your taxes. So, and, some tax strategies are also ring a bell more with clients now. I'm a big believer in captive insurance and, and normal business. I think, Hov was giving a webinar lately about, the, business insurance. They're not covering, this disaster things, A lot of businesses could have self-insured their business by setting up their own captive. So we're talking to clients now, hey, remember, we've been talking to you about captive insurance for the last 5 years, and had you had it in place, you could have put claims with your own captive insurance company for the losses here, and you would have a claim, tax-free claim coming back to your company. And all throughout the years, you would have saved money on taxes. So yeah, it opens up a lot of conversations with clients, definitely.
So you're doing a lot of "I told you so."
Yeah, it comes with territory, I guess. And also an importance to surround yourself with the right people is also a lot of people realized, during this pandemic, Some, CPA firms were not helping their clients.
I had a client who couldn't reach a CPA at all. She was just like closed and not working, and we had things that needed to be filed.
Yeah, every single client of ours who requested assistance with EIDL or PPP received from us. Some clients went on their own. Some clients went to their lenders, their loan agent, which is fine as long as they were taken care of by someone. It doesn't have to be us all the time. But every single client of ours who called us, said, we need help with PPP, EIDL, we want to engage with you. We haven't turned down anyone. We dropped our old tax work. We jumped into doing loans for like good, 4 to 6 weeks, full time, all my staff remotely. We were doing, loans, and, we just stopped all the tax work, switched gears, and, helped our clients.
So Vardan, are you still offering assistance to people wanting to apply for PPP? If there's someone out there who has a business who hasn't applied, you said that there's still money and they're still accepting applicants.
Yes, on limited basis for non-clients. Obviously, we give priority to our clients first, because this is not our, typical service that we provide. So, but we in some cases, we might take on a client just to help them on PPP, or, in this case, only PPP. So yes, if anybody is interested in having their, PPP forgiveness application, getting an assistance with that, can contact us. We might potentially, help them.
Awesome. And for the ones that are your clients, obviously you provide the service if they weren't aware of helping them kind of hash out the numbers and figure it all out and plan it out accordingly.
Yeah, we advise people, please engage with someone on forgiveness. If you applied PPP yourself and you got it, that's great. But, you probably need help for forgiveness, because it gets a little tricky.
Very nice. And as I mentioned before, your amounts that you're using and that you're receiving also have to be reflected correctly. So if you're not running regular books, meaning doing your regular bookkeeping as a business owner, this is the time that you should be, because that's what's going to help you during that audit if you are audited. So that is the list of questions that you have. We have one more question on Facebook, so I'll ask you this. Have you seen many clients with NOLs filing amended returns?
Yes.
Can you define an NOL is for people that aren't aware?
Yeah, net operating loss, and with the CARES Act, your losses, you're allowed to carry back your losses now, because under the, Trump law, the NOL carrybacks were not allowed anymore. CARES Act reversed that, so now you can go back, and claim, your losses to prior years. We have a couple of clients who we are working on their returns to carry back their losses. This is just applies to, businesses who had NOLs. It's kind of a unique situation. It's not a universal thing that applies to everyone. But if there's a company who has NOL, now they can carry it back.
And they can file an amended return.
Yeah, file an amended return and carry back those losses to prior years, claim a refund. It was great. I mean, it was a great provision in the CARES Act.
Very nice. So I think that's all the questions I had. Is there anything that we left out that you also want to make sure people are aware of when it comes to all these loans and grants and tax credits?
No, I think we pretty much covered. One quick point on PPP is there is a 6 years document retention requirement for PPP. I think, yeah, I didn't mention that. So if, you have to keep your documents for 6 years.
Provision.
I'm sorry?
I think the EIDL has a similar loan provision as well.
Yeah, EIDL has similar, and PPP is 6 years as well.
So your advice is hold on to records.
hold on to records for 6 years, just like, you know, whatever you use to have your PPP forgiven, keep it.
And I actually have one additional question that I don't think we covered, but I wanted to make it clear for people. Correct me if I'm wrong, they have to spend the money. So it has to be like the check they write to their landlord has to be in that 8-week or whatever week period, correct?
Yes, you have to write a check for all the expenses. It has to come out of the account. Most of the times, you know, your PPP is with your bank that you have a relationship with already. So, you know, they have access to your bank statements basically. So they're gonna get into your bank account and verify.
I just thought it was important because I think a lot of people that got the loan are just waiting to see what new rules come out, and they haven't actually started paying for utilities yet, or maybe they were on a forbearance with their rent or their mortgage. I think it's important to get those payments in so that the entity on the other side has time to cash it and it comes out of your account so that you have an opportunity to use it for that forgiveness. So that's it for my questions. I have none now. Thank you for joining me. I hope it wasn't too much trouble. I know we couldn't do Instagram live today. For some reason, the connection was just very slow. But I'm going to save this video and we will post it on Instagram as an IGTV. We're also going to obviously save it on Facebook, so not to worry, it will be saved. For all of you that didn't catch the first part of the conversation, we answered a lot more PPP questions in the beginning, so go back and review it. Thank you for joining me, Vardan. I really appreciate you taking the time.
Thanks for inviting me. It was a pleasure.
And as always, I'm going to have Vardan's contact information in the about section of this video on Facebook. So if you feel that you need help, I would say don't wait till the end to reach out to Vardan. Reach out to Pogosian Company and get on board with getting some assistance, calculating and figuring out all of these numbers. You know what you know. You're good in your job or your company. And know what you don't know, which is accounting and numbers and whatnot, and let the professionals handle it. That's kind of how I feel about it. So I'll link all of his information. And just to remind everyone, this was strictly for informational purposes only. Vardan was not providing tax accounting advice to any of you that asked specific questions, or any legal advice that was provided here was just for informational purposes, okay? If you have specific questions, obviously reach out to your respective professionals to get those answered. Say goodbye now. Thank you, Vardan. Have a good one.
Thank you.
Bye-bye.
Have a good day.